Hi, my name is Sam Bankman-Fried. I'm the CEO of Alameda Research. We're a quant trading firm and liquidity provider in the cryptocurrency ecosystem. Today I'd like to talk about one thing that's been a significant cause of the recent market downturns, and that's liquidations. When an account with a large exposure to Bitcoin, for instance, an account that had bought $100 million of Bitcoin on 10x leverage and then watched markets go down 5%, when that account is in danger of going bankrupt, all the assets need to be sold off before it actually does go under. The closer that account was to bankruptcy at the beginning of this process, the more desperately you need to sell off its assets. In crypto, often these liquidations don't even start until the account is only 1% away from going under, which means that all of its assets need to be sold off almost immediately. This can have really large impact. In fact, enough that it often drives the price of Bitcoin down enough that even more accounts are in danger of going bankrupt and need to get liquidated. This can cause a sort of chain reaction, where each series of liquidations moves markets down enough that another set of accounts needs to get liquidated. This domino effect can in turn drive the market down as much as 30% in a single day, causing this cascading set of liquidity failures, like what happened with banks in the 2008 financial crash. Now, if Apple stock were to move down 30% due to a series of liquidations, a bunch of people would come in and buy it back up because fundamentally that stock is still tied to the profits of the same company as before, and now you can get it at a huge discount. With Bitcoin, on the other hand, Bitcoin is itself the product, and so if it goes down 30%, even if it's just because of a series of liquidations, there's not really any reason it has to recover, meaning that the impact of liquidations in cryptocurrency is a lot more permanent than in traditional equity markets. We need to solve these problems, and in order to do that, we need to have more efficient margin calls and more liquidity provided on these contracts in the first place.